Welcome back to Stock Review Saturday episode 2. Now, today we are going to be looking at Intel Corporation because they have had a traumatic week to say the least. Now, Intel, as you know, they're involved in producing computers and they often have stickers on the front of, a Windows laptop saying this is the processor we use. And they're overall a semiconductor manufacturing company. And on Friday, their share price fell by 16% by about $10. And this is from a kind of 1 month average of about $59. They plummeted. Now, the reason why they plummeted was that you can have a quick look at the news and see that straight away they announced that their next generation chips are going to be delayed by around 6 months. Now, the reason for this delay is kind of not really too clear as such. I think generally COVID is one of the reasons they gave, but there was no clear-cut answer. And I think an interesting thing about this is obviously with investors now seeing that the next generation chips are going to be delayed, the kind of insight into it falling is that competitors are going to be able to get the next gen chips in their computers first, and essentially sales will reduce because they're running on older technology, and that's the kind of thought process behind it. And I think a way to show this directly is that AMD, the rival stock of Intel, who also are a semiconductor company that produce the same thing, have already started using the chips that Intel have suddenly been delayed in making. And their share price shot up by 16%, kind of very similar to the amount that Intel fell by, which I think is a fascinating thing to look at. So obviously, investors have kind of got the sentiment that since Intel have lost that kind of the race in terms of this new generation of chip, AMD are going to take some of Intel's customers, some of the demand, and they're going to be a more profitable company in the future because, they've got newer tech now compared to their rival Intel, who have been delayed massively because for whatever reason. Broker forecast for Intel are still very much, fairly decent. The median is $60 and the high 100, the low 45. However, I'm not sure when this was initially made or created. So what could happen is this could be of these broker forecasts could be from before. The broker forecast could be from periods where the data that they was delaying their chip into their new chips was not out there yet. So these broker forecasts may be adjusted in line with the recent news that their chips have been delayed. And then heading over to Zacks, I always find this is a great metric just to see what they think of the stock. They've got it on a hold, and they reckon that, earning per share is not going to be good this quarter. The growth in the future might be all right, and they're not reporting their earnings for a while. Their 52-week low is 43, and 52-week high is 70 almost. So I feel like they really are moving towards the lower end of their range over the last year, and their beta is 0.78, which means they're not too volatile. They're not completely flatlined, but out of most stocks, that is quite a low beta. And more often than not, as you see in this diagram, they don't really fluctuate in terms of their share price. Obviously, this is COVID, but even from COVID, they went from 66 down to 45, relative to some other companies which would have been 120, like Royal Caribbean, the cruise line, $120 all the way down to 20. So they'll have a much higher beta. So yeah, thank you for watching this episode of Stock Review Saturday. We looked at Intel, we looked at the sentiment behind why they have decreased a lot, and what probably the rationale behind investors kind of is in terms of selling it off. So thank you very much for watching this. Please do leave a like, and I'll catch you in the next episode of Stock Review Saturday, and stay tuned for some other cool videos throughout the week.